Hello, everyone. Welcome to another episode of the ALTINVESTOR podcast that equips you with the right knowledge to make your decisions with respect to alternative investments. My name is Yashunta and I'll be your host today. And today I'm delighted to welcome Nishchay Nath, who is the co-founder and CEO of TapInvest, previously known as Leafround, a platform that allows you to invest in fixed income products like asset leasing, invoice discounting, NCDs, and much more. In this video, we'll be covering more on TapInvest's journey so far. How do they manage and price the risk of their products, their future plans, and discuss about the overall alternative space. Nishchay, a very warm welcome to the show, and thank you so much for taking the time to record this. How are you doing today?
Hi, Yash. Thank you so much for having me here. Uh, been a good couple of weeks since our rebrand.
The
Yeah,
background behind you looks beautiful, so I'm sure you're in a very picturesque location and clean air, much better than Mumbai or Delhi, I guess. So.
I think this background is very typical of Bangalore startups. So
Yeah.
most of the folks that you would get a chance to do a VC with,
Uh-huh.
they'll possibly have a background with a lot of foliage.
Nice. Nice. Lucky
Yeah,
you. I mean, I'm sitting here in -2 degrees, but fine. Um,
yeah.
so Nishit, tell us, I'll place this very bluntly. Who are you? I mean, who is this Nishit Nath? And what's been your journey so far with Tap Invest and Leafround?
Yeah. Um, put it very succinctly, I'm a simple boy coming from a small town with big dreams, big ambitions, and powering through life. Um, a bit about my background. I hail from Nagpur, the city of
Hmm.
oranges. I was born and brought up in a couple of cities, but Nagpur has been my home where I grew up. I did my schooling. Uh, and after that, got a chance to go to some prestigious institutions. I went to do my engineering from IIT Kharagpur. I went to IIM Ahmedabad to do my MBA.
Nice.
Since my kind of childhood, I my father used to be in service in the
Mm-hmm.
private sector before my mother started the family business, and then my father also joined her. So I've seen that transition from a service to a business family,
Mm-hmm.
which inspired me to take some experience in the startup space when I was during my college days, and even ended up working in corporate and startups after I graduated.
Okay.
Eventually, even when I was a time A, it was a beautiful time which I spent doing my MBA over there, which kind
Mm-hmm.
of inspired me to work more closely on the investing side, on the startup side. And eventually, I joined the private equity space, had a
Mm-hmm.
brief stint over there before I had the itch to do something of my own with my own time. I love solving problems, and that kind of prompted me to push myself to think as to what's that one thing that you would want to solve for. And investments is one space which really, really attracted me. I really fancied it. I've tried my hands with things ranging from even crypto to investing in some of the more traditional products. Been there in the space for almost 10 years now. So, I mean, yeah, that's where I come from and that's my background. And yeah, today I'm running Tap Invest, formerly Leafround, along with
Mm-hmm.
a bunch of talented folks, my co-founders. So yeah, that's pretty much my background.
So, what made you start Tap Invest? Was it because of your private equity background where you were noticing, okay, these startups need a new way of raising non-dilutive capital, or was it from an investor point of view that, in India, traditional instruments are there, but people need more exciting investment opportunities? What was your rationale?
Right. So I think in 2020, 2021, right? If you
Mm-hmm.
remember, uh, the lockdown was going on, and we suddenly had a lot of investment activity.
Mm.
Our stock markets boomed.
Yeah.
We had the Shark Tank phenomena follow. Cryptos also as a space for something heating up at the time. Uh, Across the board, it became a space of focus and a space of excitement. Uh, and I also definitely got a chance to try a little bit of everything over there.
Mm-hmm.
Uh, at a personal level, like my own personal portfolio, optimizing, playing around with it, discussing a lot of ideas with my friends. We kind of figured that this was a kind of it felt like an inflection point, a behavior which would continue to stay
Mm-hmm.
in terms of we spent a decade trying to become digital, and Geo allowed us to really
Yeah.
push that boundary. Uh, the the lockdown phenomena seemed like it was triggering a new kind of a wave when it came to investing through digital platforms. That's how I
Mm-hmm.
saw it. And me and Soumya, we were kind of just trend spotting as to what would happen next, right? What would happen after this?
Mm-hmm.
We kind of figured that yes, there are certain products which are very exciting, but
Mm-hmm.
most of the wealth is generated through stable products. If you look at some of these HNI portfolios, right? HNIs have a majority chunk, when numbers quoted are as high as 70%, is being invested in fixed income products or debt based products with
Mm-hmm.
time as the portfolio sizes increase, right? And that's truly how the professionals make wealth, end of the day,
Mm-hmm.
through certain stable debt based products. We figured that possibly once the excitement dies, once we reach to
Mm-hmm.
that one particular inflection point and a particular plateau, is where people will start looking at stability in their particular
Mm-hmm.
portfolio. So we were like, hey, let's focus on bringing one stable product or a fixed income product or a debt based product, which us as Indians would be able to relate very well with, right?
Okay.
Uh, सबसे relatable product, the most relatable product is real estate. Uh,
Mm-hmm.
People ambition for real estate. We said that what's that one particular investment which can be a parallel to real estate itself, and what
Okay.
exactly is that what real estate brings to the table, right?
Mm-hmm.
Real estate has this angle of definitely the angle of capital appreciation, uh, but the excitement comes in from the income that you're able to generate from it on a monthly
Okay.
basis by putting it on lease. And that's where we saw a bunch of companies were emerging in the lease financing space itself. And we figured that possibly this could be a great entry point for us.
Mm-hmm.
We also had to come up with a strategy as to
Mm-hmm.
why do we pick up a complicated product and why not a simple product, right?
Mm-hmm.
It was a choice which we had to make. We believed that on the spectrum of investors, we wanted to target those super investors, those innovators, those early adopters who would end up
Mm-hmm.
influencing the rest of the spectrum. Hence, we decided that, hey, let's solve for the tougher piece today so that tomorrow can be much easier for us. So that's how the
Mm-hmm.
entire idea wove together to, we said that we'll build one product with a stable income feature based on leasing itself. And that's how asset leasing as a concept emerged. And
Mm-hmm.
yeah, that was the birth of Leafround as an idea.
Mm-hmm. So you have been running this now for 2 years, right? Roughly around 2 years.
Yes.
And what made you rebrand into Tap Invest? Yeah.
Right. So uh, when we started Leafround, Leafround was more like focused on asset leasing as a product. Uh, we were seeing some early numbers, 5 lakh, 10 lakh, 20 lakh, which was kind of
Mm.
exciting, and we were having that growth on a month-on-month basis. So 6 months down the line, we kind of figured that there were certain challenges that we were facing. Like, for example,
Mm.
explaining the product itself, right?
Mm.
And we've gotten the question as to what the hell is IRR? I mean, how do I interpret IRR? How do
Of
I
course.
visualize IRR? What does it really mean, right?
Yeah.
And there were a lot of challenges that we faced in how marketable that product was at the end of the
Okay.
day. We had good amount of demand coming in from the companies who were wanting to
Right.
become asset light. But for the investors, it became a challenging product to understand end of the day.
Mm.
We continue to see uh, the way we actually converted users was that users generally trial the product and have to learn it through experience, which
Right.
means that pickup of the product was quite slow compared to
Mm.
how we were trying to anticipate. And plus, there's no noise about the product either, right?
Yeah.
In the
Yeah.
market. So we had to choose to experiment with a few more products. I
Mm-hmm.
remember last year, October, is where we had piloted a bond deal, and
Mm-hmm.
we clocked our highest quantums for that, like in the history of Leafround back then.
Okay.
Uh, then we kind of we piloted invoice discounting on the platform, and that
Mm-hmm.
picked up beautifully well after that. And today, 90% of our quantums are coming in from invoice discounting,
Yeah.
and like around 7-8% is coming from asset leasing. So,
Okay.
from an investor relatability perspective, we figured that we needed to have simpler products. End of the day,
Okay.
and we kind of also figured that since this has been one of our core learnings, that simplified products is the way to go for retail investors. uh, Leafround also had, I mean, it has that one uh, tinge to it, right, where you're not able to pronounce it well. The brandability of the name was something
Mm-hmm.
which was a bit tough. We've been called Leapfrog, Leafaround, very different
Yeah.
names from
Yeah.
time
Yeah.
to
I
time.
understand.
So we decided that, hey, let's kind of take this as a feedback for us and an opportunity for us to uh, bring out our focus, our learnings over the last 2 years. And we said that, hey, we are in the business of simplifying and making financial products accessible, fixed income products accessible. And what better than to do it at a click of a tap? And that's how ALTINVEST was born.
Nice. Very good to know the story behind it because otherwise, it's just a rebrand for people like me
Yeah,
who are sitting on the other side of it, right? So amazing. A
yeah.
very good story, actually. So let's say in the last 2 years, like you said, people, let's say, don't understand what is asset leasing, and there was a need of simpler products. What have
Mm.
been your more core learnings or mistakes of running the platform? That can be personal or professional or from an investor uptake point of view as well.
Okay, okay. I think uh, the way I look at those experiences, right, or the learnings and certain tough situations, mistakes, etc. We've been just at different learning curves. Like there have been learning
Mm-hmm.
curves to a lot of things. Uh, I think we see it in three lenses, the three types of learning that we've had. One is with respect to the product market, like the product market fit.
Right,
From that perspective, what have been our learnings? Second is we are a startup and the most important asset is our people that we have. And
right.
third, I've had a bunch of learning as a founder as well,
Mm.
running this company and like really living the life in terms of living in the trenches, right? That way. So I think the most important piece was from a customer and a market perspective. We figured that products, I mean, investment products will pick up as much as they are simple. जितना simple होगा उतना पिकअप होगा
Mm.
जितना simple होगा it will be easier for them to understand and people generally understand things
Mm-hmm.
one dimension at a time. So we had to kind of innovate a lot in terms of simplifying the communications of it, right? End of the day,
Mm.
that was a major piece that we had to focus on. Second thing was that
Mm-hmm.
uh, we realized that people don't really care much about which deals we are putting. Uh, they care more
Mm-hmm.
about who is it coming from. For example, it's coming from us, right? Our
Mm-hmm.
processes, our system, they have to have trust on us. We've had
Yeah.
new deals launching on the platform, getting sold out in like 5 minutes of time. Uh, People
Mm-hmm.
have not even gone through the deal dockets or seen what exactly is this company all about, right? And they're
Mm-hmm.
subscribing through and through it, right? So we realized that we need to communicate what we are doing uh, additionally to
Right.
the deal quality itself, not just rely on the quality of the deal, but the quality of our processes end of the day and communicate on those
Mm-hmm.
parts. One more thing we kind of realized was, and this was a transition from Leafround to Tap Invest. We realized that
Mm-hmm.
investments is the process of investing involves a lot of diversification, and diversification
Right.
gives birth to a horizontal play. Uh, we
Mm-hmm.
don't want to be a platform with just a single product. We will have to have multiple products
Yeah.
in a single place. If we are a consumer focused or a retail focused platform. So horizontal play is a non-negotiable of sorts. We would not be able to either we be a pure play manufacturer and then rely on distributors, or we build multiple products
Mm-hmm.
in a single place. So those were some of the core learnings we had with respect to the customer and the product itself. Apart from that, I think at a people and a founder level, I think being able to we have to keep listening to the market. I think market is the greatest teacher.
Mm-hmm.
Uh, I think the first 800 people I've personally onboarded myself, they keep sharing so many insights from time to time. Uh, we've grown to this size
Mm-hmm.
at zero marketing costs, almost zero marketing costs, and it's just been purely through word of mouth, purely through the trust and the love that we've received from our customers, right? End of the day. And
Mm-hmm.
I'm a hardcore believer of execution. Strategy तो काफी लोग बना लेते हैं, but
Mm-hmm.
it gets down to the execution itself. So we
Execution.
keep keep uh, keep asking this question day to day, every second is what I do.
Makes sense.
Yeah.
Great. Great, Nishchay. Um, so let's say coming to the products now, of course, you talked about that people trust your process. It's not the company, it's, Tap Invest is getting that company or, invoices of this company. So what's your general due diligence process before you onboard the company on a platform, let's say for invoice discounting and for asset leasing, if those are any different from each other?
Okay. Um, so from a sourcing perspective, it's fairly similar. Uh,
Mm-hmm.
the risk analysis is something where it kind of becomes different.
Right.
Sourcing is like we end up sourcing from some of the more traditional channels,
Right.
which working with a lot of connectors, net agents. We have our own proprietary sourcing where reaching out to folks through LinkedIn, through different databases, etc. So that's how
Yeah.
we do build our pipeline. Uh, but everything boils down to the way we do our risk analysis.
Got it.
We've taken some existing risk models from the market, which some of the larger banks and NBFCs use. Uh, that's one parameter that we use. The other thing is we have built our own proprietary scoring method internally. In my previous roles, I had built these for a bank and
Okay.
had set up the entire risk function for a bank. So, and one of our investors is a chief risk officer as well. So
Okay.
we've used that entire experience to build out our application level scoring and our behavioral scoring. Both of them
Mm-hmm.
have been built out. Today, we are able to evaluate 100 companies in one go. We are able to have a handle over all the companies that we have listed on a monthly basis through the models that we've built. There is a continuous monitoring process that we have. We've set
Mm-hmm.
up proper early warning systems, red flags. Uh, but end of the day, we also believe that business is built on relationships, right? So we meet our companies very frequently, are in touch with their financiers. Uh, all the companies that we have on the platform work with a minimum of one more financier apart from us. So there are a
Okay.
lot of such checks and balances that we've been able to uh, put it in place. And again, I think market is the biggest teacher, right? So we consult experts every now and then, and that's how our risk processes have become robust and continue to develop.
So do these companies which are coming to your platform, do they have to share data, at some frequency with you? Or
Yes.
like, is that a contractual obligation between, let's say, Tap Invest and the company that's onboarded?
So it's not a contractual obligation, but
Right.
we do have a control over how much they can raise from the
Yeah, of
platform.
course. You have risk limits.
So
Yeah.
yeah, we have risk limits, and we only raise further if we get the data uh, to
Got
be
it.
able to increase any of those limits. So we do have certain methods through which we can definitely get that data in place. But apart from that, there are certain data that we can directly pull Say, for example, MCA data we can directly pull. GST API access is something that we enable, and
Yeah,
periodically we keep refreshing those scores as well. So there are digital methods through which we are able to source the data, and then the company has the incentive to share the data so that we are able to do our update our scores from time to time.
makes sense, Nishchay. So,
Yeah,
invoice discounting, you said, is 90% of your volume or of your overall base, right, in terms of AUM. Now,
yeah.
there are multiple invoice discounting platforms in the market, and some of these platforms also show you the underlying invoices or post-dated checks. Is there any plan for Tap Invest to also show this kind of data to build more trust from an investor point of view?
Yes, we do. Certain cases we've been requested by companies to not share the invoice
Right,
simply because it does involve a little bit of proprietary information.
right,
So we get forced to mask a few of the details over there.
of course.
But yes, we are in process of bringing on these invoices on these say these UDCs in place. In case if you have ideas as to how we can do that in a way that it helps the company preserve its information, I mean,
Hmm.
more than happy to incorporate those.
We'll take that offline.
Yeah.
But so let's say with these deals, then they are coming now. So let's say we talk about the general Attic deal, which was live on the platform today. How do you price the risk in that deal? I think that deal was at 14%, whereas some other deal was at 12.87. Some other was
Hmm.
at 13%. So how does that pricing work?
Okay. Uh, when we began in the beginning, right, in the early days,
Mhm.
we had taken up the ownership of pricing these deals ourselves. So what we did was we used to uh, look at what kind of how is the waterfall of different debt tranches that they have, what are the rates at
Mhm.
which they have priced those transactions, and basis that we used to have like a 1 or 2% kind of a premium to be able to issue an additional tranche and that risk limit. So we started off doing that. Eventually we figured out that we can also enable them to discover pricing on the
Mhm.
platform. So we've given companies at times a chance that hey, this is what as a say a percentage is what we would reserve, and you can
Mhm.
then list it on the platform at your rate itself. If demand comes in, then you are able to pick up that particular capital from there. But if demand is not
Interesting.
coming up, then they can increase it a bit depending on how urgent or what's the capital that they require. So we've given this flexibility to companies at times, not all the time, but we are
Mhm.
kind of seeing how that works as to if the market can help determine what's the fair price of these invoices.
Very interesting. So, do you give the companies the ability to upload the deals themselves, or they have to go via you and your team would upload the deal onto the live
So
platform?
we are building a product which will allow companies to create and list deals on their own.
Oh, wow.
Uh,
Okay.
it's already live in closed circles. It's in the beta phase itself. Uh, there is there are obviously the checks and balances are there with respect to a deal going live because it has to go through an investment committee approval process.
Hmm.
But end of the day, we're creating it into a DIY kind of a platform for companies to be able to raise this non-dilutive form of capital with certain necessary investment committee checks and balances in place.
Amazing. I think so. That will be good. It,
Yeah.
yeah, I mean, this is the first time I'm hearing a platform doing this, so great. Uh, you mentioned something about investment committee. Who else forms part of this committee?
So currently we have people internally within the team itself, uh,
Right,
all the founders, as well as we have two members from our risk team, as well as the investment team, the investment analysts who are there, right? So currently these are the folks who form the investment committee. We plan to bring in some external folks as well
right.
into the investment committee, which will help us improve it from a governance perspective as well.
Right. Is that just from a consulting perspective, or like there'll be consultants within the committee, or more from a full-time role point of view?
So, as we scale up, there would be a need to have, say, a chief investment officer as a
Yes.
dedicated designation, right?
Yes.
That would be, I think, 6 months from now, we would definitely have someone like that as a part of the team. Uh, in the interim, but at that point of time, also, we do believe that certain external experts, uh,
Mm-hmm.
possibly certain independent directors that we get on board, who we are in talks with a few folks to join, right?
Mm-hmm.
These would allow us to strengthen our governance practices, processes, and a mix of an internal person as well as certain external experts would be an ideal state for us to be in.
Amazing, exciting plans ahead then. I'm
Lots
very
to do.
excited. Yeah, lots to do
Yeah.
as well, for sure. Uh,
Yeah.
so coming to my next question, of course, we have talked a lot about why should investors choose your platform. There's an investment committee, there's a defined risk process, risk scoring, all that sort of stuff. Anything else that you would like to add on as compared to all the other alternative platforms out there? What makes Tap stand out?
Okay. Um, Informally speaking, or at a very informal level, right?
Yeah.
Me as a founder, I think my biggest job is to be paranoid about risk as a
Okay.
piece. And I think the one of my professors at IMA, he had posed this very interesting question, and I keep asking that to myself. He said that, hey, if this was the thing which would uh, save your mother at the deathbed, right? Would you
Mm.
give it to her uh, at that point of time? And that was a test which I kind of use with myself from time to time.
Mm.
And I'm personally extremely like every deal I have an exposure to. Like I have to take
Okay.
all those into play, right? And I always imagine as to how would it like I have invested, my family has invested. I think that's the way I, end of the day, have an emotional element attached with the products that I'm putting on the platform, right? That's the
Mm-hmm.
way. I mean, that's the way I'm running my business. Uh, but apart from that, I think uh, from a structure perspective, if you look at AL, right? I mean, I think we're very proud to have innovated on a particular structure which is so damn simple and bring it onto a tech platform.
Mm-hmm.
Uh, it's extremely tax efficient. It's extremely cost efficient. If you're a GST investor, it's a pretty good deal for you to, pretty easy for you to be able to set up a asset leasing business on our platform because technically
Mm-hmm.
that's what we're doing. On the invoice discounting front, I would say that we've had more or less very similar deals to a couple of other platforms.
Mm-hmm.
Uh, but we've been able to invest in building our own proprietary sourcing over the last couple of months, and you'll start seeing certain names which would be very unique to us. And we have some very good experience joining us, and who has joined us as well,
Mm-hmm.
helps us to source good quality deals from the market. Lastly, one thing which uh, we are heavily focusing on is that uh, it's all a game of trust. Trust
Mm-hmm.
will come through two things. One is performance that we prove with time, and
Mm-hmm.
two, shakal dikhani hai everywhere,
Mm-hmm.
right? Uh, we have to have not just digital presence, we need to have offline presence. My customer support has to be damn proactive. I like there are nights where I take up the customer support desk and start answering queries, right? I think
Mm-hmm.
customer service has been that one very important piece so that our customers, our investors can sleep at night peacefully. Uh, I think that's one thing which is a reason why anybody should consider a platform like ours. We really love our
Amazing.
customers and the way they invest.
Amazing. Great answer as well. Uh,
Yeah.
another thing that comes to my mind right now, because we're talking about all these platforms, is the OBP license. A lot of these platforms are gravitating towards OBP license. Do you also have any plans to get that license?
Um, so we are evaluating, I would say.
Okay.
We're not fully there yet with respect to if OBP is the right way for us to move forward. Reason being, bonds as a product
Hmm.
needs to be simplified a bit more to make
Hmm.
it much more retail friendly. And only up to that, because OBP is also an expensive commitment at the day for the
Hmm.
company, especially a startup like us. So we are building conviction on the front of bonds as a piece. We've been working with a few license holders themselves to be able to understand how would it be picked up in the market,
Hmm.
and we'll possibly take a call on the licensing as and when we are ready to fully commit to that strategy. But right now, it's a work in progress, and
Hmm.
I think things are things definitely look promising on that front.
Okay, fair enough.
Yeah,
So let's say talking about products again, asset leasing, invoice discounting, non-convertible debentures. These are the three main products that you have right now. Are you also planning on bringing any more different products in the market?
we do. We did have a pilot of fractional real estate a couple of months back.
Okay.
Didn't really fly much at
Okay.
that point of time. Possibly we don't have the right type of customer or the processes.
Hmm.
Uh, but we are in the process of even experimenting, piloting a few other products as well to see in close networks. And I think next quarter is going to be quite exciting. Plan to crack at least one more product after this.
I mean, I'm very excited. You have to include me in that closed network, Nishchay. I mean, come on.
For sure, for sure. Yeah, you have an invite on that.
Okay, great.
Yeah.
So let's say, of course, there is risk still in the system, and at the end of the day, invoice discounting is still an unregulated product. What's your playbook if a default actually happens? What processes have you set up internally that, as soon as I know of a default that I'm not going to get money for this invoice, this is what I'll do.
Got it. So I think I'll just step back and kind of take this over here.
Hmm.
It all boils down to the credit risk of the company.
Hmm.
That's what I'm facing. We are extremely paranoid when it comes
Hmm.
to how their cash flows are, and I mean, we've spent almost a year building a risk scoring method purely based on cash flows to understand
Hmm.
how good the company is and how good it is from a flow management perspective when it comes to IG, invoice discounting. Um, Credit risk is one piece that we have to mitigate. Two is we have to focus on fraud as well, because in case
Hmm.
of invoice discounting, we have to uh, establish the veracity of the invoices, where
Hmm.
we have to get those e-invoices in place, do those checks against them, take all forms of indemnity against the invoice. After that, before say a default could happen, uh, delays happen, and delays are quite frequent,
Yeah.
is what they happen. So for that, to manage that, we've created a provision
Buffer.
from our own revenues that we make. उससे हम लोगों ने we've created a provisioning pool so that our
Okay.
investors get their payouts on time, and we are able to manage the 1 2 day 3 day kind of delays. They keep happening. It's in normal
Yeah.
course of business. Apart from that, we have region-specific, even collection agencies in place, which normal traditional banks use. We have our digital methods. We've set up on-demand nashes, so we're able to
Okay.
trigger, say, collections from the company end of the day.
Got it.
So there are methods of collections that we've deployed, and quite a few of them, quite varied. We are also, I mean, if you think about it, PDCs is one type of a security,
Yeah, of course.
but it's better to have, say, a security deposit in place.
Hmm.
So we are currently working on setting up security deposits, which can cover for, say, 5%, 10% of the invoice in case of any forms of delays or defaults which happen.
Got it.
Lastly, in case of a default scenario, thankfully till now nothing of that kind has happened. We've only suffered delays from time to time.
Hmm.
Uh, but what we've learned from the market, how they've dealt with it, There are legal recourses available. There are recourses available through the trusteeship that we have in place, which we can use. There are also working with good quality anchors becomes a very important part. So being able to recover directly from the anchors is a piece that we have already established. So I think these are some of the ways in which we would have to go about managing all these risks. It's a quite a comprehensive thing that way.
Hmm. Amazing. I mean, makes sense. Definitely makes sense. Um, Thanks, Nishchay. Lots of content or lots of advice or wisdom, actually, is the right word for me to also absorb. I guess as a last fun question, which I ask to every member who comes on my podcast is, okay, how do you manage your own investments? What is the split between traditional and alternative investments for your personal portfolio?
Okay, okay. Um, I think if I were to look at it from a equity debt split, I have a 60-40 in place. In
Okay.
that 60%, I have 50% in stock markets and 10% in startups. I've started some platforms
Okay.
ke through doing angel investing. So that's one alternative
Right.
which I've invested in. And even my equity portfolio is quite little concentrated. Some mid caps are there, so that's how I kind of look at
Hmm.
that portfolio. On the debt side, I would have out of my 40%, 20% would be in my platform itself. Another 10%
Okay.
goes into gold, love gold, particular,
Hmm.
and another 10%
Okay.
in FDs as well. And a small
Okay.
maybe a
Interesting.
portfolio in cryptos as well, like a 1%, 0.5%.
Right.
Yeah. But
Fair enough.
उम्मीद है कि नहीं पहुंच सके कभी.
Even I have a
Yeah.
small exposure, but I bought it when it was when Bitcoin was at 70,000 rupees, one Bitcoin. So I bought
Okay. Wow.
a small amount of Bitcoin then, and now of course that has grown in size,
Yeah.
but I'm just keeping it. Maybe another 10 years, we'll see. And
Learning. Yeah.
another question is, of course, 20% is in your own platform, but do you try out other platforms in this space just to see how their products and stuff are working? Or you
Yeah.
trust your platform too
So
much?
as a founder, uh, I didn't drop much, right, as a salary, right? So whatever I get, I'm at a survival allowance right now. So that's what I invest in my own platform. But I do
Uh-huh.
have team members of mine who do invest on different platforms, and we keep
Right.
exploring what good
Discussing.
things,
Yeah.
great things they're doing. Yeah, that we do keep doing.
Great. Great.
Yeah.
Awesome. Thank you so much again, Nishya. Amazing session, in my opinion. Lots of learnings around Tap Invest. Before this, I would say it was just another platform for me, very honestly and bluntly. But speaking to you, I understand it much more in terms of what goes behind the scenes. And I think so that context is very, very important for our viewers as well, who understand you and Tap Invest as a business and your vision as well. So, thank you so much for taking the time to explain all of that.
Okay,
Um,
thank you so much for having me here, and uh, I'm sure, I hope it helps your audience. And yeah, look forward to working in the future.
for everyone who liked the video, please do like, share, and subscribe so it reaches much more relevant audience and also helps App Invest grow and Alt Investor grow as the companies. But thank you so much. If you have any questions for Nishchay, either comment them down or we have a lot of Tap Invest representatives on our WhatsApp community. If you'd like to join the WhatsApp community, I'll mention the link in the description or directly reach out to me via other channels. We'll get those questions to Nishcha and get them answered. Thank you so much. Thanks again, Nishcha.
Thanks.
Yeah.